Yo, what's up, guys? Welcome to one of many overview videos. I decided instead of uploading the whole stream, just to do a quick overview, like a very quick video, just talking about the trades that I took and stuff, or didn't take in this case. I wanted to make this very simple for you guys, and I want you guys to understand like why sometimes I don't take trades, even though yes, my strategy worked out today, I still didn't take a trade. So if you guys don't know my strategy, I trade a altered version of ICT silver bullet strategy. Um, it is called, or what I have called it, the golden bullet strategy, right? So basically, right, we mark out the 9 a.m. high, 9 a.m. low. We take one side of it, and then we wait for a market structure shift, and then a fair value gap, and then we long or short to the other side. Basically, that's it in a nutshell. Basically. Right. So today, right, we took out 9 a.m. low, which we had here, right? This is 9 a.m. low here. We came down, took out 9 a.m. low. We got a fair value gap, and we entered the fair value gap. And then we pushed quite aggressively out of it. So that's really good. And we got a change of character right after, which usually I'd wait for it before, but it's not really a big issue. But I would usually want to see the change of character market structure shift before. I will do videos going over every little bit, like what a fair value gap is, change of character, things like that. I'll do videos explaining all of it, break down everything, right? This is just an overview for today, like a sort of like trade journal in a sense. So why did I not take this trade? Simple answer is there was a very low probability. Right. In the trade, right, we had this bearish fair value gap. We had this bearish fair value gap. We had quite a few bearish fair value gaps stacked upon another, as you can see here. So we filled the bullish fair value gap, pushed up it here, right? So we inverse this fair value gap straight away. So we don't, sorry, my keyboard's on charge over here. So we don't have to worry about that one, okay? So after price respected this fair value, this bearish, the bullish fair value gap, and inverse this one here, right? What would I want to look for, right? To consider entering, right? If these two weren't here, right, and price was okay, I would have entered, right? Although I would have liked to see the change of character before we entered into the fair value gap. So if we got the change of character like here, that would have been perfect, right? I would have entered. Would have gone, yep, enter, because we got a strong close out of the fair value gap. Although we did push past the consequent encroachment, which usually isn't a good sign, but we still got a very strong reaction to the fair value gap, which is fine. All right. What next? Right, we continued higher a little bit. We inversed this fair value gap. Right, okay. We still had another bearish fair value gap above it. Right, okay. So this whole zone here shows me that sellers are in control, which means that basically any price point across here, price could just reverse and push down. There's a high probability that price is going to reverse, even though we respected this bullish fair value gap, right? Because the 1 hour, the 4 hour, the 15-minute, the half an hour, even the 5-minute time frame, we're in we're in downtrends, bearish market sentiment, right? So this goes to show that just because everything is lined out perfectly, you've got to look at the ideas around it, okay? Other things. So because we had all these bearish fair value gaps, which would go against the trend of what I'm trying to trade into, I would have got stopped out if I entered. Obviously, I would have gone into profit, but it didn't last that long. So we filled this fair value gap, pushed higher. We managed to inverse all of these bearish fair value gaps. So I was waiting for a retrace back down, right? Something to fill a bearish, one of these bullish fair value gaps. So we had this bullish fair value gap that I marked out here, right? I wanted this as an entry, right? Because we'd already taken out all this liquidity here, right? So I wanted price to come back down, tap into this bullish fair value gap here that we create. It's only a small one, but nevertheless, I wanted price to tap back into it, right? Then I wanted price to push higher off it, get a strong response to pushing into this gap here, and then push higher. So what I wanted price to do is obviously come down, push into this gap here, and then get a big response to it. And then we would have gone long to our, try and line it up here, to our take profit point, which is here, which is the 9 a.m. high, right? Okay. That's what I was hoping for. Obviously, that didn't happen. When price came down, we just pushed straight through this fair value gap and we inversed it straight away, right? Didn't even stop in it. It did come back up and use it as a resistance, which usually 9 times out of 10, a inverse fair value gap will be used as a resistance. So we will create the inverse fair value gap here, right? So this is the inverse fair value gap. Price would have created it on an uptrend, right? Like here. And then price will change character to the downside, right? Price, so this, okay, let's start again, right? So this is a fair value gap to start with, right? So an inverse fair value gap is just a fair value gap like this, right? Very simple. Fair value gap here. You price pushes into it. You think, right, it's going to either respect it or disrespect it. If it respects it, it's going to just go higher like this, okay? Right? However, price pushes through it, closes below it, right? Okay, this is now what we call a inverse fair value gap. There we go. Inverse fair value gap. And then what will price do? Price is likely to push back up into it. Use the consequent encroachment, which is the 50% mark, which is this line in the middle, which is the halfway point of any fair value gap. It doesn't make a difference how big it is always halfway, right? Taps the consequent encroachment, maybe even higher, and then we'll continue lower. It uses it as a resistance, right? So as you can see here, right? Price here, right? We inverse this fair value gap straight away. Price comes back up, retests this fair value gap, this inverse fair value gap, uses it as a resistance, pushes lower to take out this hourly low that we have here. And then price continues to just push up, right? Okay. So that's why we didn't take the trade. It's not just about all of your confluences and everything that you use getting hit. It's trust me, it's not about that. I know it seems good. Like this on its own, right? Looks great. If we take out all this bearish fair value gaps and stuff, right? Okay, good, right? We've pushed below the hourly low, right? And price looking like it's turning. Oh, we've created a bullish fair value gap. Great. We've pushed into the bullish fair value gap. We got an incredible reaction to the bullish fair value gap. Right, I'll enter. Okay, right. You enter here, okay? With your stops down here. And then with my strategy, we would target the 9 a.m. high like this, right? Yes, it would look really good from here, right? But you'd come down and you'd push it around here and then you'd push up and we'd be in profit for a bit, right? Okay, that's great. But because of this bearish liquidity that we had here and the fact that price was basically kind of respecting all of these for a bit, like we'd push into this fair value gap here and then price would come down. It wouldn't close out of it, but we'd still push down, showing that there is some selling momentum. Pushed into this final bearish fair value gap, big sell off from it, showing that buyers are not in control anymore. Sellers are in control. Even though we pushed higher, we still respected all this sell side internal liquidity, right? So you would get stopped down here. See? Here, you get stopped down, right? So before you enter a trade, make sure you look at everything around you, whether you've got London lows, Asia lows, any other particular like high interest loads. Like this low here, right? This was from a while ago. It was an hourly low all the way down here, right? This was from like last Tuesday. This hourly low we created here, this is the one we wanted to take, and we did. We took it. We came down and took it, but only because I knew about this bearish fair value gaps here. That is why I didn't enter. Because if I even though everything played out perfectly, because it didn't line up with this, if we pushed up and pushed up above like this high here, or even this high here, if we pushed up and then created a fair value gap, pushed down into the fair value gap, and then went higher, I would have entered off that. But we were within this range of all these bearish fair value gaps. That is why I didn't enter. That's exactly why. You've got to look at everything that's going on around you, not just I've hit this, I've hit that, brilliant. Like obviously you have your list of how to enter. You know how to enter. You know how to make a trade, right? But 9 times out of 10, people don't look at what else is happening, what else has been formed, where the trade idea is invalidated. Some people put their stop losses like here. And it's like, great, okay, you've put your stop loss there. Brilliant. Okay. Even if you get stopped out here, that doesn't invalidate your trade idea. Okay. So there's so many different things that you've got to look at, which people don't understand before you actually enter a trade, right? Because I could see all of these bearish fair value gaps right here. And I knew that I had to wait until price broke above them. That's why I was waiting for a retrace here. And then we retraced down, but we inversed it straight away. So there was no entry today. That's basically why I didn't take a trade in a nutshell, right? Because I thought price might push back up here. But obviously I knew, as I explained, an inverse fair value gap, price is likely to come back up, retest the consequent encroachment. If it pushes above the consequent encroachment, doesn't, like this one here, we pushed above it, we closed above it, right? Like we closed here and we opened up here, right? So there was a little jump, right? Doesn't make much of a difference, right? So even though we closed above the consequent encroachment, it doesn't mean the price is going to push back up and just keep going. No. It's just you want probability on your side, right? The probability is if you go below a consequent encroachment like we did here, the price is going to continue lower. It's just probability. It's about making sure that you stick to probability and you only take A+ setups. Like yes, I could hit everything in my strategy. I hit here, right? We got the fair value gap, we got the change of character, we took out the 9 AM low, bam, bam, bam. We got everything hit perfectly, right? But yeah, I still didn't enter because of my practice and the time that I've spent in the market. I learn, and I've learned and continue to learn when to enter and when not to enter, when things are for me and when things are against me. If there's too much against you, then don't enter the trade. It's pretty simple. That's how it works. So yeah, hopefully this video helped a couple of people out. Just make sure you look at things that are going on around you when you trade them. Just because you hit everything that you need doesn't mean that price isn't going to push a tiny bit higher. Take out high level liquidity, like a key level or something, like an Asia high, and then push back lower. It doesn't stop price from doing that. Price might just need a little bit of liquidity just to push it up higher. That's all it might have been. Like with this fair value gap here, like here, price probably just wanted to grab a bit more liquidity to take out these internal liquidities here. That's probably all it was. Nothing more than that. All right, guys, this is a quick overview of like why I didn't take a trade today and kind of explaining it and trying to help people out. As I said, I'm going to do more videos explaining like what a fair value gap is, what liquidity sweep is, bearish market structure shifts or bullish market structure shifts, or just bearish and bullish like markets. I'll do like a long sort of like video explaining everything in detail. But yeah, this is why I didn't take a trade today. And I didn't win and I didn't lose. So that's good. So yeah, no trade today. Hopefully you guys did manage to take a trade today and hopefully you were profitable. If not, there's always tomorrow. And make sure you keep an eye out for the things that are happening around you, not just what's going on right now. All right, guys, take care. Bye.